Boom. Good to go. Welcome, legends. Welcome back to another weekly webinar. Excited to go over a lot of things, have a lot of things to talk about. As Ash just said, this Clockwork Week, common term that is used around in our community to the people that are part of the full volume training course. But unfortunately, not right now, only because the markets are quite consolidated and things of that nature. And at the same time, guys, I'm excited to go over something that's been that Chris and I were just talking about, that's been a discussion going around social media and things like that, especially with the Brexit news. And a lot of people got stopped out to those trades, and we're going to go over the basis of why those trades didn't go through. We didn't personally take any trades, or at least I didn't signal anything or take anything, but I know a lot of people were in those, got stopped out, and I think this is going to be a really good webinar to review that and go over that. And so, if you guys don't know how these webinars work, or if you guys are new to here, what I do is I break down these $6 index pairs that you can see here, including the dollar index itself, making it 7 total pairs. And I go all the way from the monthly down to the smaller time frames to give us ideas and potential trade setups that we can potentially take. Now, do take into consideration that what I do say now and what comes out later on could potentially change, as market conditions are always changing due to the dynamics of them. But excited, guys, to go into today's webinar. And I think a lot of people enjoyed how I ran last week's webinar. Didn't really make it so long, and rather got straight to the point on the kind of critical areas, and then from there focus more on the questions and answers for you guys. And so with that, we're going to get into today's stuff. But before we get into the setups and things like that, let's go over one important thing to start off. We got the big man talking tomorrow. So potential effect on all currencies across the board, but mainly the euro, of course. And so most pairs are most likely going to be consolidating leading up into it. If there's going to be any trades that are most likely going to be taken tomorrow, they'll probably be after London's done into US, only because, as students of my training course do know, we do ideally on high volatile data, we wait the entire day. But if you're someone of experience, you do want to wait some time for the markets to digest and allow them to calm down for you to start looking for trade ideas. And so potentially New York's going to be good to go, like 9 a.m. Eastern, which is the 4-hour candle close. And that's ideally when trades are good to play. But if not, you might have to wait till London on today's Tuesday. So that'd be, Thursday morning my time, or potentially Thursday afternoon for some of you guys. And so be careful with that. Most likely markets are going to consolidate, but based on how dollar's looking, guys, it looks like we are due for some type of bear market for quite some time. Let's start off with the monthly time frame. So no significant change right now where we are within monthly structure. We are factoring in that the entirety of the momentum is still to the downside, in which all of this bullish momentum right now is treated as relief or warranted as profit taking, right? A state of correction for potential further continuation to the downside. Now, even though we do have this ascending trend running along here, that is not indicative that we should start to move to the upside until we do start to create higher highs and start cracking that 94.15, 95 handle to state that this initial bearish momentum was invalid. And so as of right now, guys, because we did break back inside the previous monthly support, we are going to warrant structure as still range bound between 93.30 all the way up to, I don't even know why I'm saying this, all the way up to 100 though, but more importantly, we are range bound within this region. And so pulling it right now, we can see some rejection occurring from the monthly and weekly time frame, and that does make sense, as if you guys do look left, we can see a lot of pending orders that are sitting here. And so this is basic support and resistance, supply and demand, whatever you want to call it, support, resistance, bullish pending orders, bearish pending orders, buyers on this side. So it makes sense why we're seeing rejections off of this. And so it's not to state that we should completely start to tank and go down again, but it does state that we should expect some type of pullback, which is completely understandable, because let's not necessarily focus so much on this environment right now, and let's just focus more on what's been going on. Whoops, that's the background. What's been going on kind of after the mid of 2017. And so notice this. After we broke out, right, we created short-term higher highs, we made a very strong impulse. And instead of making some type of liquidation or profit taking to show trend continuation, we just continued to rally. And a lot of my students do know this. This is warranted as a reversal pattern, not a continuation pattern, for two reasons. For just one main reason. If you guys know how a basic notion, or how a trend forms, it forms in 4 movements. You need a low, a high, speaking of a bullish trend, then you need a higher low, and then a higher high, and that creates your trend, right? And so if you notice what happened here in dollar, once we broke out, we're going to state this is the low, and that's, it created a high at some point. And instead of pulling back to create that higher low, that third movement, state of liquidation, relief, whatever you want to call it, we continue to move up, which was fine. It just allowed us to know that, you know what, the bulls are going to die off and we're going to expect some type of pullback. Now, the pullback's what we're going to review today is, you know, are we going to pull back to here? Or are we actually going to pull all the way back to there to create a structural retest? So, you know, it's not to say the bull market's over, but short-term bear market is to come about. And so looking at how structure potentially play out, two possible scenarios right now. Like I said before, we are treating all of this as liquidation, relief, and things of that nature. So, you know, regardless, any buys or sells more into the short term. Speaking from a weekly perspective, you got a lot of room in the daily and smaller time frames. But looking at it, two potential ways. Inverted head and shoulders potentially form out. That's your left, that's your head, this is your left. If this starts to break out, could expect structure to pull back to that 91.50 handle. And then from there, notice that would be treated as relief or state of liquidation after the initial impulse. And then from there, we potentially could break out, target back to the 94.15, that being the neckline, and potentially break out to go all the way back to the tops. That's a viable scenario. At the same time, that would formulate a trend. How do we know? That's a low, that'd be our high, this would be a higher low. And if we broke out, that'd be the higher high. And so, you know, then that would start to state, okay, now we are definitely in a bull market. But that is one scenario. Or we're going to pull all the way back to where we initially broke out. And as my students know, this would be a structural retest. And then from there, we could see some type of bullish orders come in and start rallying back to the upside. The only way that we are going to state that this is invalid is if we break back below where previously broke above, stating that, you know what, this was definitely all treated as relief. And now we're going to look for small continuation and you'd run it down. And that would be the ideal scenarios that we're expecting now. But definitely looking at it, we are expecting pullbacks on the dollar for the next coming days, weeks, who knows how long. Now, looking at these main areas on the smaller time frame, we can see that that was the first critical area we broke to start this entire bull run. And then secondly, more importantly, we do want to factor in where that left shoulder is coming about. And so looking at dollar on the daily right now, two ways we can go about it. That was our impulse. Like I stated, this is all reversal, not continuation. Looking at it from a smaller perspective, we can see here that structure did just create short-term lower lows. Why am I saying short-term lower lows? We need to invalidate this entire region here to state that this is now invalid and we should return back at least to the start of this uptrend here. And that's what would happen to see that type of movement. So looking at it, it is short-term because we're breaking the first higher low, creating a lower low. The next higher low would be here and the last would be here. So everything's going to be short term as we move down, unless we completely clear this area stating this is invalid, we should return back to this region. And so looking at it from a 4 hour, and the buys are only warranted if we really crack above and start making a strong enough break. So if I remove some trend lines here for you guys so we can make it a bit cleaner, let's take a look at what dollar's doing. Like I said before, we did just create short-term lower lows in which we can see we did have an impulse, short-term relief or state of liquidation. And so two potential ways dollar breaks out. We see a break of the last higher low, creating short-term lower lows. Then we see a short-term pullback or retest, and then you could expect a drop down to the weekly support. Now, one thing to factor in is that even though if we do drop down to the weekly support, this could all be treated as relief or a state of liquidation for potential continuation all the way back to the upside. And that's something viable that could come about. Why we're stating this movement right here is going to be short term. Once again, if we start to break below again, create a short-term pullback, this again is short term. Now, you guys would be like, that's a pretty big significant movement. I'm speaking in a grand scheme of things, so a really big picture here. And so this is one viable option. And then from there, we're either going to continue to the downside, or from there, we might see some deceleration and start to pull off, potentially one. Or we're going to continue to break down and we're going to come back to where this ascending trend started, once again, short term. And then to completely invalidate that movement, right, we got to break one more time like we saw on the daily. The only way that this sell doesn't come about is if and only if, even though we broke out of this, we have to break the last lower high of this descending trend line to create short-term higher highs. From there, we'll look for some type of continuation pattern, and then we could expect it to come back to the tops, once again, short-term, because you are in a range. The only way that you would start seeing a definite bull market and a longer-term run to the upside is if we crack the tops, look for short-term continuation, and then from there, you could look to run it back all the way to the highs. And so with that, that's how you want to go and approach dollar. Nothing really too tough to see right now. We are having some definite possibilities going on here and good outcomes. But as of right now, we are going to say everything is short term, most likely going to return to this 93.30 handle. So looking at euro, counter, opposite of it, basically a direct inverse to the euro. And so looking at the same concept here, we are seeing some deceleration or exhaustion occur near that 3-year previous monthly resistance turned newfound support, or bearish pending orders turned into bullish pending orders, but we are still going to side with the entirety of market, which is bearish. And so looking at it, we are very interested to see what's going on. I am, at least, because I want to see what's going to happen here. Is that going to be warranted as a structural retest or not? That's what I'm curious about, because either this is going to flag out and we're going to go. That's a bad color. Let me switch colors for you guys. So either this is going to flag out and this is going to go, or this is going to break, invalidate this, making this all relief, pull back, and then we're going to target the lows and get to parity again. That's what I'm really interested in from a monthly perspective. Does that happen? That's why it's so critical right now, which is why everybody was part of my signals and setups. You guys know that we're stating everything is short term, only because there's no clear definitive direction. Now, don't get me wrong, there is 500 pips between that movement, but looking at it from a monthly perspective, we are critical. So looking at it from the weekly, a couple ways that we could go about it. First, just like the dollar that we saw, inverted head and shoulders, we bring it back to where euro is. And so 2 possible ways we're going to come about. First, I want to highlight the previous 3-year resistance that we did break. And then secondly, more importantly, I want to highlight the potential areas that are creating this head and shoulders pattern. And thirdly, this French presidential gap might return to there. Keep this in mind, okay? So notice, we do have this inverted head and shoulders. With that, then this, 115, 116 would be the low. So we look at it from a smaller time frame perspective. Let me get rid of those fibs for you real quick. That wasn't the fibs. That's the fibs. We can see here, if we zoom in, that we are in a state of liquidation or relief as of right now after the initial impulse. And so this is all warranted as short term. More importantly, we are range bound. And so even if we break out, still short term back to here. And we're going to go over that more in the daily, as we could still continue to rally down. But looking at it from the weekly, either we're going to return back. That's going to create the right shoulder of this head and shoulders. And then from there, we will start to target all the way down to fill that. And that's what the beginning of the trend is. And then it'll be interesting to see what happens from there. Or this is going to leg all the way back to the low that it initially broke to start that entire bear market. Then from there, we're going to expect some pullback and start to drop again, which would be a structural retest. My students know what I'm talking about in the course. Only way that we can completely invalidate that initial bearish momentum is we got to crack above. And with every impulse, of course, comes liquidation, profit-taking, relief, and then from there, you will see continuations back. Just giving you guys longer-term plays to have a good understanding of why, when I'm stating short-term, long-term, which way X is going to move, Y is going to move, Y is it going to do it, etc. You guys have a good understanding when I'm in the 4-hour time frame why I'm acting in the way that I am, only because I'm taking into account everything that is going on from the monthly, weekly, and daily. When I take my trades, guys, from a smaller time frame perspective, it's factoring in every single thing that is going on. What's the behavior, what's the environment on, the monthly? What happened last week? What was the close last week? How are we going to move this week? What's the data coming out this week? What's going to consolidate? There is not one thing that I am not aware of when it comes to me taking my trade. Because you know what? There's so many uncontrollables in this game, guys. So many, that the things that we can control, the net long versus net short positions. How many of you guys are doing that? Understanding the difference in weight in the basket of currencies, right? How many of you guys are really factoring in how many correlations go into the current, currency that you guys are trading? So many uncontrollables in this. Take advantage of the controllables that you guys have. And so looking at euro from a daily perspective, first and foremost, definitely range bound. We can see that. Within this, we do see a very strong impulse, and then from there, we do see a state of liquidation or relief, which means could start to drop down and leg one more time after we tag the top. So let me repeat that. If we do, in my opinion, we're going to tag the top, and then from there, might start to pull back and drop, or for any buy, we got to break the tops. Short-term continuation, start rallying back up to here, because you want to look left of where we could potentially go. Creating that right shoulder, and then from there, this could all be relief, potential continuation down, or rally a little bit more, create a structural retest, and then start pulling down. That is what I see on euro right now. The only way that the longer term sell comes about is you see another crack below. Then from there, you could look for some type of pullback, liquidation, and start running it straight to the floor. Straight down. But looking at it from a 4-hour time frame perspective and how we could approach it for the coming days. Let's take a look to start. Do I got my magnet on? I do. Cool. Let's extend that to about here. No, that is not on the low. Sorry, guys. Okay. Looking at euro and what had happened, I'm excited to go into the pound example and go over, why the fundamentals had nothing to do with how structure moved and things of that nature, but looking at euro and how we want to look and approach the trade. Please factor in you are range bound due to the entire bearish market, and so it's completely understandable why structure is choppy, liquidated, and things of that nature. It's all profit taking. Within it, you do see an impulse treating all of this as relief, state of liquidation. This is what we stated 3 weeks ago was going to happen, this exact scenario, simply due to the fact that the pending data was unable to break that 115 handle. We stated that this was going to go into a long, bullish, a decelerated ascending movement, right? And you can see how choppy the buys are. They're not straight movements, right? And so looking at it, short-term play that we have here to the upside, okay? Ooh, this is getting ready, but the R&R might not be good enough to take, my friends, so we will see. Ooh, no, can't signal it. Sorry. No, that is not good to go. But I'm going to pull it back to the 4 hour. I don't like the 1. All right. Looking at it, 2 possible ways. I would like to see a break back above to invalidate this initial bearish momentum, small pullback. Then from there, you could expect a rally to the upside, creating an inverted head and shoulders and things of that nature. The real buy is going to be a break above the highs. Look for a small continuation and start running it back to the upside. Once again, all short-term, moderate to higher risk. Why am I stating that? You want to look at where you are within the roller coaster. Notice this. My roller coaster analogy is this. When you take, roller coaster always goes up, it comes down. And so you want to look at the trend, the start of a trend in the same sense of how a roller coaster starts. At the start of a trend, the risk is always going to be low. And as the trend continues, the risk increases because you're always expecting pullback, liquidation, or relief, just as if a roller coaster would come back down. Now, the roller coaster doesn't have to come all the way, always all the way back down, but you're always expecting that pullback or liquidation. So notice if we look at the roller coaster effect, we're kind of at the end in reference to where the top of the consolidation is. And so you can either take this short-term buy, try to run it to the tops and crack here, which is a potential buy. But you do have Draghi tomorrow, and so that is not something viable. The real buys, if you don't want to be trading Draghi, are going to be a break above, small pullback, and then from there start rallying above. Crack back above the weekly resistance to state that, you know what, this is no longer valid, okay? Because this will most likely occur. I'm going to give you guys this trade in different color. This will probably occur, and I do see that potentially happening. But at the same time, it could not if Draghi does not allow it to. And so looking for the potential sell scenario here is we are riding off of this ascending trend. You guys would be like, oh, we broke it, but the trend's on a straight line direction. It consists of highs and lows. So I'm going to pull it to here only because we never broke. Oh, that's not my box. We never broke these lows, more importantly, that I do want to see. And so for me, for a sell, you would have to see a break below, small pullback, and then from there, short term again, because you do have this daily ascending trend, as this could all be treated for relief, for another pullback, breakout, and then continuation back to the tops. And those are the potential trade scenarios. Your only sell will come about if and only if, when we came to here, you broke down one more pullback, and then from there you could target the lows of the range. Once again, you are range bound. Okay. The sell definitely, the sell and buy are definitely warranted as short term because there's not a lot of movement occurring within the pair. So really the safest plays are above or below. You have short term trades in here, in here, in here. So these are all short term, moderate risk, higher risk. These are much longer term and lower risk trades simply because you're creating higher highs or lower lows. You definitely have a definitive direction. And so these become a bit more of complex structures only because it's very fast. Market makers have a lot of retail traders at hands. And so if you're not used to trading structures like this, just go above or below unless, you do see clear definitive directions because this is quite choppy and becomes difficult to trade with it. USD CAD to start on the monthly time frame. I still believe we are sell bound, and I think we're going to push back to the downside. And I want to go over CAD's economics from a weekly perspective. You can just see it better. So let's begin. We do start with an impulse, and then from there we do see a long state of liquidation or relief, and then from there we do see continuation of that initial impulse. And so notice what is going on. And we're going to go over that, monthly breakout, etc. But I want to go over this example for you guys real quick. I took the measurements away, but did you guys know that if you guys measured the pullbacks of this and this, they're exactly the same to a pip? And if you measure the pullbacks, the pushes of this and this, they are in difference. This is 100 pips stronger than that. So what I'm getting at here in the end of the day, guys, is that if we look at the way CAD economics are structured, they're structured for appreciation. The BOC wants their currency, as strong as possible against the dollar. If you guys don't, believe me, take a look real quick at two things I'm going to show you guys, okay? US oil is hitting all-time highs. That is CAD's main driver, 1. 2, the BOC will continue to raise rates until they get to where they want to be from an economic perspective. And what do I mean by that? In the end of the day, and going over this breakout, and more importantly, breaking out of this key monthly area, we're going to review that. Notice here once again, what do you guys see here? We have a BOC rate statement and then the overnight rate. Already factored in that they're going to raise again. They want appreciation. Oil is hitting all-time highs. Be very careful approaching structures like this, because a lot of people will get caught in areas such as here and believe that this is the area to take the buy to go up, when that is not the case. That is not correct. Okay? And so be very, very careful on what's going about. If you guys notice, and all my students know this, a trend starts by breaking out of either a level or, a level or a trend, right? By creating higher highs or lower lows. Notice how this trend started. That was the first initial lower low. Notice where structured pulled back to. To all my students, you guys all should know what type of retest that is. And so that is, a structural retest stating that if this starts to break down, in reality, the notion of a structural retest and what it calls for is breaking the lows. And if that's the case, we should expect another one of these. We won't know until we come back and break back inside the 130 region. If we see a movement like this, we can put a safe bet we will tag the ascending trend and potentially crack the lows for new lows. That is a definitely viable solution. But as of right now, looking at it from a weekly time frame, and let's go back to the daily time frame. But I want to see one thing. Once again, okay. All you guys that are here right now, watch this. I'm doing this webinar a bit different, a bit more educational. Listen to all of this right here. I was giving you guys all the reasons on why CAD should potentially break the lows, because the structural retest where the trend started by this is the first initiation of a lower low. My students know that this is a structural retest, and I was stating we might get another one of these. And how would I know that's correct? Well, I did state oil and all of that stuff, but people will be like, that's subjective. Well, watch this. How did this movement happen? It makes a drop, right? How did it start the drop? This was the first lower low that was created, right? Notice where it pulled back to. Structural retest. And then what is the notion to all my students of a structural retest? To break the lows. And we broke the lows. You know what I mean? So that's what I'm saying, it's exactly the same. And here you guys are on the Zoom call, literally, I'm showing you guys the exact same thing. You guys see where this trend started? It broke this low. Tag. Where did this trend start? How did this trend start? It broke this low. Where are we? We could expect another drop. Let's see. But let me know if that makes sense to any of you guys. Would love to hear your comments in the chat on something like that. And then we'll definitely get to that topic later on. But looking at UC right now, like I said, it's just short term, but we definitely going to have to see what the data is going to do. So tomorrow, you guys also got CAD news. So CAD's most likely not advisable to trade, and nor is Euro. So anyone who's trading Euro CAD, you are a crazy person. And so I commend you if you'll trade that. But looking at CAD from the daily time frame perspective, let's see what's going on. We make an impulse here. Reversal, not continuation. Where did the trend start? By breaking that and creating a lower low. Now we are ascending, hence this is all treated as liquidation or relief. But within the liquidation or relief, my friends, we do have a short-term impulse. So look, if this breaks out, pulls back, we're stating it's only going to pull back to here. Create a structural retest, and then we could potentially drop again. The only way we could invalidate this initial bear run is if and only if we break back above not only where the initial sell started, but back above the highs to state that this is definitely going to go above. Because remember how big of a correction we're making within structure, okay? And so you have to factor in if we're going to continue in one direction. For example, CAD is trying, in retrospect right now, CAD is trying to change its entire environment. And so if that's the case, for you to take any continuation trades from a bullish perspective, you got to crack key levels. You just got to bang, bang, bang them out. You can't, try to just take continuation trades on the smaller time frame. So, looking at this, you guys are like, all right, Albert, so how are we going to approach this? And I'll be like, all right, there's two ways. Let's first start with how the sell came about. If we take a look, sell came about by breaking that low, creating a short-term lower low. Short-term lower low, because notice we're still ascending here, right? So short-term. Notice we make the impulse, short-term continuation pattern that turned into reversal. So where could we potentially go? If we see a short-term break, continuation pattern above the daily resistance, could expect rallies back to the last daily resistance that broke this low. Once again, this would still be treated as relief or a state of liquidation for potential continuation down to that ascending trend again, but potentially lower, because we would state that this would be a structural retest. That would have been the momentum. Now, the only way that we could invalidate this, like I stated before, was we got to crack above not only where it started, but crack the highs as well. Then, as well as break the previous weekly resistance, say, you know what, the buyers are definitely in. There's no stopping it. Screw what Albert was saying. His bias on this bear market is completely wrong. And then from there, you would look for continuation and then start running it back up. That's what's going to happen. Now, the only way that this is going to continue down is you want to see a crack, and not a crack. You could take a short-term sell. I would not take that. I would not, but you could. You could take that. But the real play is below the monthly support, simply for the fact that you want to state that this initial breakout here that caused that huge bullish surge is now invalid. And the way that we do that is breaking back below. The impulse, of course, follows profit-taking liquidation. At the same time, creates your third movement of your trend. That's the high, that's the low, so lower high, then you would expect to break to tag the lows to create the fourth, or your descending movement, you would tag daily support and potentially weekly. Failure to do either of those will just warrant range within the current environment that we are in. That should not be something that you guys are interested in. And on top of that, be very careful on what's going to happen with CAD. Only because we have so much, so much coming out tomorrow with it. And on top of that, you got EIA numbers coming out at 10:30. And so a lot of stuff coming out. But we should have a clear direction after tomorrow, hopefully. But we will see. USD JPY. Monthly, nothing really going on, no significant change. On the weekly time frame, we are decelerating or exhausting near that 111.48 to 80 area, but I do want to go into a couple of things real quick. We do have an impulse within an impulse, okay? We did start this initial huge rally to the upside. Within that, we are stating all of this is relief, state of liquidation. Within the state of liquidation or correction, we do have a strong impulse in which we did see a short-term rally. Short-term state of liquidation, relief, whatever, in which I understood why people said we should start to rally to the upside, but we had to create higher highs and then go. And we never did that. And so in that case, what had happened was structure was range-bound for quite some time until we broke these lows. Then from there, we do see this initial drop, treating all of this as relief or a state of liquidation for potential continuation back down to the ascending trend, potentially back down to that 100 level. Now, if that does happen, then from there, what we are going to expect is this bullish momentum to kick in and start to expect some rally all the way back to the tops. That's how we're playing UJ. The only way that this buy comes about is we got to start seeing a definite push back above where it broke out, and more importantly, above this region to state the bear market is done. Pulling it to the daily time frame, what we can see is some clear consolidation occurring as of right now. And on top of that, you have one consolidation box within a second range of consolidation. And so not really much to go on with right now. I won't even go into the smaller time frames, only because this is ideally how you want to be looking at UJ. You're either going to see an impulse to the upside, invalidating this initial sell, breaking back above where it initially broke and above previous weekly resistance. Then from there, you're going to look for a pullback. And then you could start to rally that back to weekly and potentially monthly. Or you guys have a short-term sell below the lows, a pullback, and then you could expect a drop to first low, potentially to the second low. And if we crack, that is the more lower risk sell, if you guys would like that. All of this in here is short, 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 lower risk, a longer term trade. And then from there, the real one is below that, below the 105 back to the 100. Okay, I'm not even going into the small. I'll go into the smaller time frames when we do the highlights at the end, guys. But the reason why is because students in my course know when two channels intersect at the same point. Simply wait for a daily to close in one direction or the other. And you'd be like, well, what two channels are intersecting, Albert? I don't see anything. And I didn't draw it, but that's not gonna work. We got something like that going on. So yeah, that's ideally why I'm stating here that we gotta wait for, let it prove to you which way we're going to move, right? Because the one thing, and the other example that I didn't go in here real quick, guys, is because this is the first buy we stated. The second short-term sell was here down to here, another one down to here. Because all of this can be treated as relief or stated liquidation for one more rally up unless we broke, and then you could target the lows here. And that's what I'm getting at. And then that's why we're stating that all the buys are short-term because of the initial momentum. Let it crack above. Pound dollar, the example that I want to get onto, and let me take a quick sip of water on this. Okay. So, pound dollar. A lot of people got stopped out on this. Start with the monthly and then not the 2-month. I need to update my subscription. I just get too lazy. I need to do it. That's annoying with ads. Okay. Monthly right now, we look at pounds economics real quick. We do start with a very strong impulse. And then from there, we do see a long state of liquidation or relief. And then from there, we do see another very strong impulse, in which all of this was a state of liquidation, correction, and things like that. As stated always, there were short-term plays that you could have taken in here. And now we are counting this as one movement, stating all of this is correction or liquidation. Now, looking at pound, we're definitely due for more downside. I'm sorry to all my UK legends out there, but your currency is going to depreciate massively, in my opinion. And so, no bueno. But my economy's not doing good either. I'm not happy with the way it moves. So, but looking at pound on the monthly time frame right now, we are seeing some type of pullback or rejection that's expected after such a very large drop. With every impulse does come relief or a state of liquidation. And so looking at it from the weekly time frame perspective, and then we're going to go into that daily and that false break movement. Completely understand why we're decelerating or exhausting. We see an impulse, reversal, not continuation. Remember to formulate a trend from a bearish side. This is how you need to happen. 4 movements, not 2. An impulse only has 2, and a high and a low. You still need a lower high, and then you need a lower low. That forms your 4th movement, formulates your trend. We only have 2 here. Right, we still need 3, and then 4 potential structural retest, head and shoulders pattern, etc. But want to go over more importantly that false break that was occurring. But real quick, going over why we're seeing bullish pending orders here. Notice to the left here, and also look previously, this was all bearish territory. When we broke above, buyers take over, basic supply and demand, support and resistance, and things of that nature. Now, looking at it from a daily perspective, I want to go over something very important with all of you guys. If you guys are a part of my course or not, my students know that a trend is not a straight line direction, but rather a consistency of highs and lows. What do I mean by this? Notice this. This trend broke out here, so why did we still continue to go up? Well, we never broke the last higher low of the ascending trend, treating all of that as relief for further continuation up. So even though we broke the trend, we actually never broke the last higher low to create lower lows and warrant an invalidation of this initial breakout. That's why a trend is not a straight line shot. It's a consistency of highs and lows. Lower lows or higher highs warrant shift or continuations within momentum. And so looking at pound dollar, and I was going over this with Chris, and I was reviewing why pound dollar did not play out. I want to go over you guys just a basic chart here real quick on, you know, what had happened with pound. Couple trends that we had. A, we never broke out of this. A lot of people said that wasn't the trend, and the trend that actually broke out was this one right here. Fine. And they're like, well, why didn't it go through? Well, A, I know no one put their stops here if you took a buy. So in reality, you would have never gotten stopped out, right? Stop losses are not meant to, you know, get stop hunted out, but invalidate trade ideas. So I know no one did that. So that's why all the buyers got stopped out, because no one properly traded it. But even so, it's not a buy anyway, for a couple of reasons. Whether we broke out of here or we didn't break out of here, tomato, tomato, I'm going to just go over this. Let's go over the basic notion of a trend. This was one trend. This was the next. And so if, sorry guys, so sorry, someone was calling. If that was one, this was another, and that was another, let's go over the basic notion. That's your high, that's your low, that's your lower high, and this is your lower low. So where's the last lower high that we have to break to create higher highs and warrant an invalidation of this bearish momentum? And more importantly, a shift within the bears to the bulls. Well, we got to break this high, right? So I love when you hear on social media, and let me just take 2 minutes out of this, guys, you know, and not calling anyone out. I'm not here to start beef with anyone or anything like this, but what I'm getting at here in the end of the day is that this game is so technically driven, and I can't stress that enough. It is the most technical game in the world. And if that's the case, this is driven through pending orders and the amount of money that's placed on X amount. And that's why we set rules to reduce risk so we don't get caught in examples like this. People said it was due to Brexit, right? Had nothing to do with Brexit. That's nothing to do with why your trade got stopped out. Because you know what? Even if you guys took a valid entry like this, I don't like that level. Can I have this? Thank you. Break, retest there, right? Even if you guys took that trade, no one would be stopped out, because you guys would put your stops below previous lows, plus 15 to 30, and then you potentially target the tops or even higher. And a lot of people be like, oh, well, that's 183 pip stop. That's a large stop. And then I argue in the end of the day, well, maybe it's not the trade for you. Or maybe you have to factor in the pound is more of an aggressive mover than other pairs, right? You know, in the end of the day, pound moves more aggressively. So if you took the trade and you improperly put your stop, I have no sympathy for if you took a loss. Now, if you took the trade, you properly took your stop, I'm still not happy, only because structure has not shifted momentum yet. We have not created higher highs. But I am happy that, you know what, you're properly putting your stop below previous lows, plus giving it breathing room. But whether we break out of this trend or whether we break out of this level, higher highs need to be created first. And people be like, oh, I missed the movement. I missed the movement. Then you don't believe in the basic notion of an asset, which is appreciation and depreciation. All a breakout is an appreciation or depreciation of an asset. That's it. And so with every impulse will come pullback or state of relief for further continuation to the upside. Now, of course, this will be short term because the entirety of the momentum is to the downside, right? Treating all of this as relief or state of liquidation in which we could expect a structural retest. Going to go back to the other example. But just going over examples of why people got stopped out. If you guys are part of my course, you guys know daily is your direction. You can't switch momentum unless the daily is in that direction. The 4 hours says, if the daily says buy and 4 hours says sell, you're still going with buys. Why fight the market? That's like me trying to fight Floyd Mayweather. You know what I mean? Not interested in that. And so looking at pound, what could come about, potential formulations and things of that nature. Just like EU, very similar. We have a head, left, so impulse, reversal. If we break out, could expect to push back to where that previous left shoulder formed, treating all this as relief, state of liquidation for potential rallies back to the lows, to that neckline, and potentially rally down to 127. Or go all the way back to about 138, create a structural retest. From there, start rallying back down. Only way we can invalidate this initial bearish momentum is if and only if we break above, followed by short-term continuation, and then you could expect a rally back to the tops. That's from a daily perspective. 4 hour and how we're going to go about it. My guys know When two channels intersect at the same point, we wait for a daily close in either direction. So we're going to wait for a push to the upside, small pullback above the weekly resistance, invalidate that sell, and then from there you could expect a pullback, a push all the way up to the monthly resistance. Or we're going to break below, small pullback, and then from there drop down. You want to invalidate this bullish momentum, break back below. Failure to do either, my friends, will just warrant consolidation or range. That should not be something that you guys are interested in. AUD and NZD to finish it off. And no, this is not a trade that we took. This is a trade idea. And so I was also showing how we should be taking the trade, which is got to be the break of the tops. We're going to go over this really good example of risk to reward ratio and stuff like that. But going over to the monthly start, we are in a state of liquidation or relief. And so looking at it as of right now, we can see that that was the main driver in about 2013, treating all of this as profit taking or a state of liquidation. And within that, we are range bound more importantly. Now, looking at it, right, one thing to factor in is that we did break out of this ascending trend, and we did in fact break the lows. So AU does look like it's going to depreciate, but can accept some type of choppiness only because you want to be looking at all the pending orders to the left. And so looking at it from a weekly time frame perspective, we can see here that we did in fact break the lows, and now structure looks like it's gathering orders, potentially one more drop down to the monthly support. Only way that we can invalidate this bearish momentum is we got to break back above. Failure to do either will still warrant bears in charge. Looking at it from a daily time frame perspective, we are still looking for continuation potentially to the downside if we break back below. But looking at it right now, we can see that there was this sharp impulse. Then from there, we do see a state of liquidation. Oh my goodness. Sharp impulse followed by a long-term reversal pattern in which we finally did get this state of liquidation. And then we saw one more drop cracking below those weeklies and things of that nature. So now looking at it from we got to go into the 4 hour only because we can definitely see how we can invalidate that initial play. And so, this might be a sell if we want to take it, but we would first have to wait for a break back below where the initial bull run started. So taking a look at it, do want to zoom out for you guys real quick so you can see exactly what I'm looking at. Let's see how this bull market started. Please keep in mind that we are descending. So the bull market started by breaking above this previous region. That is our initial impulse. So anything traded to the downside right now is short term, treat it as relief, because we could expect a rally back to the upside. Once again, this is short term, moderate to higher risk, because the entirety of the momentum is still bearish. Well, if we broke above here, etc., we could expect a rally back to the upside. That would be one trade idea. How do we invalidate this bullish momentum? Break back below, short-term continuation pattern, and then from there expect a rally back down. Most likely below the daily support, but you will have a short-term sell within here to the daily. Free-flowing trade is within here. Failure to do either, my friends, will warrant range or consolidation, not something that you should be interested in. But want to review the one example that I was going over with Dream FX. He's listening to this. Shout out to you, legend. And so I was going over a potential trade that we were going to take, and he was like, "Were you going to signal this?" And I was like, "No, I'm not going to take it." And he's like, "Why, R&R is not good enough?" And precisely. And so look at this. So this was the ideal trade that I want to see. I want to see a break back above this previous low that we broke to state that this was invalid, in which we did. And we got a short-term pullback. He's like, "Are you going to take it?" And I said, "No," because notice this. Our take profit 1 to our stop loss has always got to be a 1-to-1. Our first take profit would have been the tops here. And so looking at it, our stops would have had to been something like this below that previous low. And so it would have never been a 1-to-1. So this is a perfect example, guys, of how sometimes, even though the trade may show technically it could be a confirmation. If the R&R is not good enough, then it is not your trade. And so that's why we were stating the best trade idea would be above the highs so that we could start taking that back to the ascending trend. And then from there, run it below the lows. And that would be the trade idea that we would be looking for. And so it's not the best. Like I said, it's not the longest risk to reward ratio. You got a short-term play here, but that would be the ideal scenario. Last but not least, my friends, New Zealand dollar. Monthly time frame, same thing as AU. They tend to move in the same way. You do see this impulse, a long state of liquidation or relief. Within that, you did have a very strong base, which we're not breaking. Pulling it to the weekly time frame, it's very important you guys understand where NU is. A lot of bullish orders after we broke out of this, 5-6 month resistance. And so you can see the buyers own this a lot, hence all the pullback that is occurring near here. But we can state that this is all relief or liquidation after the 3 weeks of the bear market that we are in. So pulling it to the daily time frame right now, 2 ways. well, not right now, 2 ways. We'll go into the smaller time frames. We do have a really nice descending channel that is occurring because you will see a very sharp impulse, and then from there, a nice state of liquidation or relief, and then from there, you will see another sharp impulse. One thing to factor in is that this is much larger than this. It tells you the bear market is dying off, and so if we do start to break back above where that previous low was broken, followed by short-term continuation, you could expect rallies all the way back up, stating this was invalid. Only way that this is going to become a sell, where you could take short-term sells in here. We're going to go over that in the smaller time frames, but the real sell is below the weekly short-term continuation, and then you could expect a rally all the way back to the downside. But that's completely up to you guys. And so looking at it from the daily time frame, daily. Oh, this is what happens when you have long days, my friends. But it's all good, all good. Love you, legends. In the end of the day, I gotta stop saying that, repeating myself. Very sorry. Okay, let's get into it. So 2 ways that we're going to take this. You do have short-term plays for the bullish side. After that, the impulse. This is relief, state of liquidation. So if we break out, pull back, short-term buy to the upside. Real buy is breaking back above where the initial sell occurred. Short-term continuation. And then from there, you could expect a rally to daily resistance. The sells will come about once we invalidate this initial bull run. How do we do that? Where did the breakout occur? Through here. So what we would like to see is a break. Short-term continuation. Apologies, guys. You want the break below the monthly, and you want the continuation below the monthly to state that monthly support is broken. And then from there, you could expect a rally back to the downside below the monthly support. Reason why I'm stating below the monthly and where the initial breakout occurs, because this could rally all the way back down. Be stated as relief or a state of liquidation for one more push back to the upside. And so failure to do either will just warrant consolidation within the pair. That should not be something that you guys should be interested in. And so with that, those are the 6 pairs that I want to review in reference to the top down pairs from Euro all the way down to NZD, and top of that the dollar index. And so now, guys, I'm going to take a quick sip of water, and then from there, we're going to quickly run through the pairs one more time, just looking how we can assess them from an entry and exit perspective next 24 to 72 hours. I'm just giving a quick overview to wrap it up, and then from there we will get into the entries and the exits. And then from there I'll read it. But I read Julian's message real quick. He said pattern on the monthly. Yeah, I'll break down Euro Swiss franc as well. I'm gonna quickly go through these pairs one last time for the highlights, and then we will get into everything. So all right, guys, let's get into it. So if you guys don't know what I'm going to be doing, I'm going to be breaking down these next $6 index pairs one last time to give us indications of potential trade setups that are going to come about for the next 24 to 72 hours. Please factor in that we do have Draghi coming out tomorrow, as well as CAD rates. And so markets are going to be quite volatile, quite choppy. And so be careful, trade smart, don't trade during news, and let's get right into it. So Euro, as of right now, the environment that we in is range bound due to the initial impulse that was made, stating all of this is liquidation or a state of relief. I do want to take your attention real quick to the 2 potential scenarios that can come about on Euro to US dollar, like we were stating in the webinar. We do have this head and shoulders pattern potentially forming, in which if this does start to rally to the upside, it could rally to where that previous left shoulder did form, creating that right shoulder. From there, that 115 handle will be the neckline of this head and shoulders, stating all of this bullish momentum would be treated as profit taking or state of relief for potential continuations back down to that neckline, or potentially all the way lower to break the neckline, completing that inverted head and shoulders pattern. Now, if that doesn't come about, structure could simply continue to rally all the way back to where the initial breakout did occur, where the first lower low was made, stating that all of this is still relief or stated as liquidation for further continuation to the downside, tagging the lows again, making this a structural retest. But looking at it from a 4-hour perspective and where structure could go for the next 24 to 72 hours, please factor in Draghi is speaking tomorrow. And so this pair is most likely going to consolidate leading up into the data. However, once the data is finished, you will most likely have a clear direction. If you guys are not familiar with trading complex structures, such as trading range-bound environments after such a long selling period, and on top of that, trading initial impulses and correction of reliefs with it, simple plays are above or below the previous ranges, only because you do have short-term trades within here, and we're going to be going over that real quick. So if you do take your attention to Euro right now, you can see there's 2 possible scenarios. First was the initial impulse made by Draghi a couple weeks ago, stating all of this was relief or a state of continuation, in which if this short-term ascending trend does break, followed by this previous higher low, you could expect a short-term pullback, and then from there you could expect a rally to the ascending trend. Now, if we do break the ascending trend on the daily, plus below the daily support, stating that this was invalid, you could look for a short-term continuation pattern and expect this to rally down to the lows of the consolidation box. Remember, we are range bound, so that's all we are stating. Failure to do that, guys, we could see potential bullish plays. If this does start to rally, we could expect a push back to the tops and potentially back to the tops of the range. Now, one thing to factor is that this is a deeper impulse within the entire state of relief, and so we could expect another drop down to the ascending trend, very possible, stating another state of liquidation or relief for potential rally back to the upside, or if we break below once again where that initial bull run started, we would state that is invalid. USD CAD on the daily time frame, just like Euro, has a lot of high volatile data coming out tomorrow, and so be careful. More importantly, we were stating that CAD is still, in our opinion, treated as a corrective structure, and more importantly, this is the state of profit taking that we are in after that initial impulse occurred. And notice this, one thing we were factoring in the webinar as well, is when this impulse occurred and we made this long state of relief or a liquidation, notice where it stopped out at. It stopped out at right exactly where the initial sell occurred, which is where the first lower low had happened, stating that this was a structural retest. Why is that so important? I'm going to be using a different color for this one. Notice what happened here. When we made this huge drop down here, notice where structure is stopping, exactly where the initial sell occurred. And so this could be stated as another structural retest for potential rally down to the ascending trend and potentially breaking the lows just like this previous movement did. Now, right now, everything is critical from a bullish and bearish perspective, and simply wait for the data to prove to you which way we're going to move before you guys decide to take any trades within this pair. And so looking at it from a 4-hour perspective, two ways that I see it with the data: either A, we're going to break above, short-term continuation, and then from there we could rally back to the potential weekly resistance, but be careful, this could be critical. Why I'm stating this: when we rally here, we could rally only to the daily, creating a structural retest, stating all of this as liquidation or relief for potential rally back down to the ascending trend. Now, the only way that you can invalidate this initial bull run here is if once this does flag out, we have to break back above, stating this was invalid. And more importantly, to state the bull run is going to occur, we have to break back above the previous highs, creating higher highs, stating this weekly resistance is now invalid. Short-term continuation pattern, we could expect a rally back up. Failure to do that, my friends, you want to see a strong break not only below the ascending trend but below the monthly support, short-term continuation pattern, and then from there you could expect a rally back down to the weekly support. Failure to do either, my friends, will warrant consolidation. That should not be something you are interested in. You do have short-term trades here and within here, but nothing's really long-term until you break above here or below here on USD CAD. USD JPY on the daily time frame, I'm going to go into the 4-hour with you guys, but once again, as my students know from the course, when two channels intersect at the same point, we are waiting for a daily close in one direction or the other. The two channels I'm speaking of are the ones that I just drew. And so looking at it, we do have a short-term state of liquidation. We are in an environment of short-term liquidation or relief after that initial impulse was made, stating all of this movement was short-term, moderate to higher risk. Now that we are at this critical point, we could see a couple of possible scenarios. We're either going to break above, making a strong impulse, breaking back above the weekly, stating this was invalid. From there, you're going to expect short-term continuation, and then you could expect a rally back to the weekly resistance and potentially to the monthly. Now, if that doesn't happen, my friends, what we will expect structure to do is we will expect structure to make a short-term drop, relief, and then from there you could expect the first rally, and we will go down into the smaller time frames for this. Another short-term play down here. The more free-flowing trade is below where that initial bull run had started. But let's pop to the 4-hour time frame to see how we could look for potential trade scenarios. And so, looking at UJ, key critical areas. Like we said, if we're going to break above, we have to see a very strong push up, short-term continuation, and then from there rally back up. For the sell, you want to see a break below these lows and back below the daily support, monthly support, short-term continuation, and then from there you could expect a rally down. You have a short-term trade here, not worth it. This is a better trade, but still short-term. The real sell is below this, short-term continuation, and then you can get down here. That's a more free-flowing trade. Besides that, guys, to completely invalidate this, we must break back below relief or continue profit taking for another rally back down. To break or to invalidate a previous breakout, you must break above or below where it previously broke out. And so breaking back inside. And so going to pound dollar on the daily, we discussed this many times in the webinar previously. There are two potential formations to go about, and more importantly, we're going to go over why this was a false break. To start off, just like the Euro chart, we do see a potential head and shoulders pattern that could be formulated if this starts to pull back, stating all the buys will be warranted short-term, moderate to higher risk. We can understand why structure is pulling off near this region. A lot of pending orders sitting here after we broke out, so therefore buyers do take over. And this, if we do start to break out, would target that neckline. Now, failure to do that, and this still does continue to rise, we could potentially create a structural retest for potential continuation back to the downside. The only way we can invalidate this initial bear run is we have to break above. Short-term continuation can rally back to the tops and potentially that weekly descending trend line. Now, looking at pound dollar real quick, just want to go over why structure got stopped out and why a lot of people ended up getting beat up on the current trade. Whether you guys waited for this trend to break out, or you guys waited for that trend to break out to warrant whether you're going to take a buy or not, a lot of people got stopped down on the trade simply for the fact that they didn't wait for two simple things: A, daily trend break, and more importantly, we know a trend's not a straight line shot, but rather a consistency of highs and lows. We never broke the last lower high of the descending trend line, therefore momentum never shifted, and rather we can see why market makers were able to grab as many orders as they did and start to cause structure to pull off. Simply wait for a daily candle in one direction or the other when two channels intersect at the same point. And so that is the main reason why people got stopped out. It had nothing to do with the data or things like that. The data is just another tool that market makers can use to grab a tremendous amount of orders. And so this is a basis of price action. Had nothing to do on that. And when you switch direction, right, daily is your direction. If you're going to switch, you need a daily breakout continuation on the smaller time frames. And so that is the main reason why a lot of people ended up getting stopped out within that movement. And on top of that, we did create a gap, my friends, and you guys should not be trading the gaps. And so looking at pound dollar, how are we going to go about the structure now? What can we do to change it? What I'm going to do first is I'm going to move back to where we were on that previous false break, just to identify that as the lower high that I want to crack. Looking at it, we can see that we are at a very critical area in which what we do want to see first is a break above the descending trend line and back above the weekly resistance, stating this initial push was invalid. And then from there, we're going to look for a short-term continuation, and you could potentially rally to the daily or monthly resistance. Now, the only way the sell comes about, my friends, is if and only if we do break below the previous lows. From there, a short-term continuation, and then you could expect a rally back down to the lows. The real low is a breakable low. The real sell is a breakable low, short-term continuation, and run it down. The real bullish run is first a break all the way above here to state that this is all over. But like we stated before, that's going to take some time. AUD USD on the daily time frame, we are at a very critical area to begin. A lot of pending orders are sitting within the current region that we are in, and so you want to be careful. We have seen false breaks within this previous region. We could see the same as of right now on AU, but looking at it more importantly, after we made this initial impulse, this was a very long state of reversal, not continuation. We did get a short-term relief, but structure hasn't really made a serious liquidated movement yet. And so looking at it, we are creating short-term higher highs here, so we could expect a rally back to the descending trend. Remember, this would be treated as relief or state of liquidation for potential continuation back to the downside unless we broke back above previous highs to state that this was now over, short-term continuation, and then rally that back to the upside. But if we take a look at the 4-hour time frame on AU, there's a couple of ways that we can go about it. And so looking at it, we do have this initial impulse here. This is all treated as relief or profit taking. If we break out, short-term pullback, you could expect a rally back to the daily descending trend line. Once again, this is treated as short-term simply for the fact that we are descending. You do want to see a break above previous monthly resistance, from there short-term continuation, and then you could expect a rally back to the daily resistance. Now, if that doesn't occur and this still continues to drop, notice how the bull run occurred. The bull run occurred by breaking this previous region. We want to break back below it to state that this was invalid, in which you want to see a strong impulse, breaking that last higher low, short-term continuation, and then you could run it to the floor. So you guys would state, can I take trades in here? There are viable trades to take in here, as in you could take the break of that short-term pullback and run it back down. But once again, this could be all treated as relief after that initial impulse for potential continuation back up, creating a structural retest as well. So be careful on that end. That would just be warranted as a higher risk. Last but not least, NZD USD to start. Well, I said to start, to end. We're at a very critical area at NU only because we are not breaking this certain region right here, sitting at like 67.58 up to around 68.60, about 100 pips. You can see false breaks occur, and so potentially another one occurring as of right now. Looking at it in a more closer perspective, we can see that NU's behavior starts with a very strong impulse, followed by a nice state of liquidation or relief, followed by another strong impulse, in which that is the current environment that we are in, a state of liquidation or relief, in which we could potentially be creating a structural retest. However, one thing to factor in is this impulse and this impulse. This is much shorter, and that initial impulse telling us that the bear market is potentially dying off. Pulling it to the 4-hour time frame, like I stated before, guys, we are looking for the same type of movement here if it does in fact break the lows. And so looking at it for as of right now, this is definitely a difference compared to the last movement, only because this is a bit more impulsive. And so there's two possible ways. This could be treated as relief after that initial impulse for a potential break back to the upside. Once again, this would be short term. The real buy is breaking back above this previous high, short-term continuation, and then you could expect to rally that back up, all short-term, guys. Now, even if we got to this point here and pulled back, this would all still be treated as relief for potential continuations back to the downside, coinciding with daily's overall momentum. Now, the only way that we could see a sell is, and there's one more buy actually, we could pull back all the way to this previous area where structure did in fact start the bullish run. From there, this could all be treated as relief or a state of liquidation for one more rally back up. The only way that we can invalidate this initial run is we have to break back below it, also below the monthly support, followed by continuation below the monthly, and then you could target the lows and potentially even lower. And so with that, my friends, these are the pairs that I want to review in reference to this week's market. And so with that, be very careful, guys. Trade safely. We have a lot of data coming out tomorrow. And so the good thing, though, is that if you guys are an opportunist like me, and you guys are not a gambler, you'll simply wait for the data to create your opportunity, and you guys will execute. You guys will execute once that opportunity is given. Don't be that gambler. Be the opportunist, all right? Trade safe, guys. And thank you so much for taking the time out to watch me break down these charts. And now we're going to get into the questions and answers. And so, woo! That is tough, my friends, to just talk straight for hour and 10, but it's a lot of fun. It's a lot of fun. So just give me like 2 minutes. I'm going to get a sip of water. And from there, I will get into all the questions that you guys have. All right. Let's see what's going on. I know it's like, I just try to like get it all out, and sometimes I speak too fast, and some for my internationals that use English as a second language, but at the same time, like, I feel like I got so much information that I got to pump out there, and like, I'll be blunt with you guys, even the webinars that I run here, I'm not including like 3/4 of the stuff that I'll include my overall analysis, only because it would take way too long, you know, measuring movements, figuring out the behavior, et cetera, et cetera, et cetera. You know what I mean? And so, you know, I try to just give the rundown in reference to a price action perspective without incorporating all the elements that we use from the course. And so, yeah. All right. Yeah, Forex Kobar. It's a phenomenal name, right? I love that name. All right. Someone asked, I don't know when I can enter the setups that you sent. To all the people that are part of the group chat and signals and setups, the setups are just mere outlooks that I send Sunday and Monday for you guys to see and give you guys ideas of which way I'm going to be breaking down market structure and how I'm looking to approach market structure. And then the more in-depth approach, of course, is the webinars and things of that nature. But the setups give you guys, you know, access to what I'm looking and stuff like that. Alpha Forex, what's up, big man? How we doing? Julian Legend, you got a mic? Do you got a mic, Julian? Or no? You're at work. All good, big man. All good. I was going to pop you on. We go over your question. But your question was, would you say there is a head and shoulders pattern on the monthly NZD/USD as it kind of looks like a megaphone channel? This is expanding. Are you saying this one? Is that what you're saying? Or are you talking about a bigger picture one like this? This one, right? Not like, because this is not a head and shoulders pattern, unless you count this as a false break, and this is your head, left, right, neckline. Which one, with the bigger or smaller one you're counting? The first one. First one's valid, Julian, only because we never broke the head. So if it came here and came down, then it'd be warranted as a double top. But since we're cleanly holding that, I give you that. I mean, in the end of the day, I'm not going to try to figure out the pattern, Julian. I'm going to just go like that. Fair enough. And I'm just going to state that structure is range bound. That's all. That's not even the correct range. The correct range would be like that. The reason why I'm saying this is the correct range is false break, false break, false break. So that's what I'm saying. Like, you could say tomato, tomato, head and shoulders, range, whatever it is. It's just break the lows, go, break out of that, go to the tops. Does that answer that, Legend, though? He said, beautiful, awesome. Okay. Chris, I'm muting your mic. Listen, man.
Oh, all right.
Yeah, you're Frank.
What's that?
Want to look at Euro Swiss franc real quick?
Yeah, go on.
All right, let's bang it out. Okay. Wow, what up? Shout out to you, whoever trades this stuff. Some ugly stuff. All right, I'm gonna just work with the last like a year and a half. Okay.
Yeah, I mean, what I've got is very, very basic at the moment. I've not done a full breakdown myself, but someone pointed it out earlier, and it just caught my eye.
All right, so I'm just establishing this as the highs and the lows, just with the range.
But because we've got,
what do you got? Sell or buy?
At the moment, I've got nothing. I've got two levels. If it goes one way, it depends. It should be in a tight range if you're looking the same as me.
Let's see. Hold on, 2 seconds.
Oh my God, what's going on with that? But obviously, we've got Jargi talking tomorrow. That might be the catalyst.
What do you think?
What are you on a daily?
All right, tell me how. Annotate it. To everyone listening to this right now, I'm gonna unlock the annotations, and I know someone's gonna do it. Don't be that person that starts drawing on my screen. Because I'm unlocking them for Chris, and there's always one person. I love you all. There's always that one person. All good, Legend. All right, Chris, tell me from the daily how you want to see it. I gave you the annotations. Go ahead.
Oh man, I was on the 4H. Where's it? I'm still not used to this Zoom thing.
How do you want to see it in this?
So I want to see.
I'm going to tell you what I see. Okay, I see a couple things real quick, okay? I see 2 things, okay. Let me label this with the zone. And then I'm going to tell you, I want to see if you can call them all out, okay? I see, let me count real quick. 1, okay. I see 1 short-term buy. I see 1, 2, 3. I see 3 sells. Within the 3 sells, I see 2 short-term sells. I see 4 sells. 2 short-term sells, 2 long-term sells, 1 short-term buy. Can you spot them for me? So work with the buy. Work with the buy. The buy is the easiest.
Right. So the buy is this, and then off we go.
Right, and why I'm saying daily, to switch momentum from descending to ascending, we got to have a daily break on the 4-hour.
Yeah.
Okay, now this goes into the first sell I was saying. What type of retest can this be, big man?
That'll be structural.
4 continuation.
Yeah.
Down. Good. Okay, so I'm gonna put buy and sell. Chris got one here, one here. Beautiful. Okay, let's keep it going. So I'm gonna erase all this. Let's say we never break out. Keep it going. Give me the other. I saw 3 more cells. Give me 2 short-term cells and 1 long-term cell.
Right, for the sell I was looking at, I think it's pretty similar levels. I want
And
this,
this is why I was.
and then this
Okay, that's the short-term or long-term.
short term.
Because okay, I also see another buy. Shit. Sorry. Okay, so 2 buys because this could be.
True.
Right? Right? What's
Yes.
the retest right here? Could this be, right?
Yes.
Because look, Legend, this could be a low, a high. That's only 2 movements. How many movements do we need to formulate a trend? 4, right?
Yeah, exactly.
This would be a higher low and then a potential. Look at that. Okay, so do you see the buy there?
Yeah.
Okay, so that's 2 buys, and you just gave me another sell. Okay, give me now another sell. I see 2 more cells.
And then obviously for the next sell, we want this. This would be a nice sell, I think. This one.
Okay, that's 3. Give me the last one.
And then obviously.
That's how we work, people. You know what I mean? See, and this is the thing real quick. We just gave all plausible scenarios. What I find interesting is that there will be traders out there that will stare at this chart and come up with 25 more scenarios. There's only there's only this is the only thing that can happen.
I mean, if some entries, I mean, you got people probably got retail shorting it right now, haven't you?
Yeah, the whole point here is like, but that's the whole point. They would be buying here as well, and market momentum is where, Chris? It's down in this example.
Yeah, of course.
You gotta wait for that to break, retest, then you can buy.
But I think this could be a nice trade this week, maybe next week, because obviously we've got some catalysts coming out.
Because let's go over this real quick. This is what, and what is all of this right now?
Well, that's your impulse, and this is relief.
So all bullish trades, short term or long term? Short term, right? And then
but I think either way it's quite nice because you've got enough room to the upside to get a nice trade.
Okay, but one thing I'm just gonna make a suggestion. Where are we in the roller coaster if we break out here? Beginning, middle, or end?
Near the middle, I'd say.
Right. So okay, so let's say maybe not normal lot size, but maybe like 20% reduced.
Yeah.
Right. Only because you have to remember you're taking account to movement, Legend.
Mhm.
You know what I mean?
Yeah.
That's something else I'm going to add to the course. There's so much stuff that I'm so excited to add to the course. But yeah, that's another thing that we're going to, we
could see a fib, like a 50 fib somewhere in here.
I know, Mr. If the Legend was here, he's probably listening to this, but one gentleman who is full-time, Matt, as many know him, or as some call him the scalp god, and his fibs, he would pull retracements like this and be like,
yeah.
This is what he would say. Ready? I hope he watches this later on tonight. He is a phenomenal trader. So he would be like this. He'd be like, we're going to pull up to here, and then we're going to start dropping. That's exactly what he would say. or they would say they're going to pull up to here, and then we're going to start dropping. 2 ways. But yeah. But that's the thing. To all you people that draw fibs like this, if you take entry here and you're a swing trader, nope, no bueno. No good. No good. You see, scalpers have different parameters. Just remember that when you're an intraday trader, it's a bit different. They're looking for different things. Even though the foundation of how an intraday trader trades is the same as how a foundation of a swing trader trades, the entries are just a bit different. That is all.
I mean, I know some day traders, and they work purely on a percentage return basis. They don't even think about pips. They just go 3% return and then cut it.
And look, and you're preaching to the choir. Like if Steve was on board, the other gentleman that trades with Matt, that's all he talks about is that, he goes, the beautiful thing about what we do is our R&Rs are so amazing. Even if we lose 2 trades and the next trade we win, we've made back both, and we've made 2 more winning trades, because usually they're between 3, 4, 5, and 1. Because the beautiful thing about people who take my course and turn it into an intraday, if you can do that, is that because your stops are so tight and their goal is to turn the intraday position into a swing, it's like you have a 10 pip stop for a potential 100 pip gain. You know what I mean?
Yeah.
So that's the cool thing. But then again, to intraday trade guys, I will just be blunt and honest. If you have a job, if you have kids, if you don't have that much time on your hand, you can. I'm just telling you right now, it's that unless you're going to commit to a session, it's so tough.
Plus, they've all got grey hair.
I mean, it's just, I just think until you have a lot of time on your hands, I think swing's the way to go. If you want to change your approach and say, I got a tremendous amount of time on my hands, go intraday. But I just want to put one more thing on this, and we'll get to the other questions. I just want to put it like this. If you ever hear, my friends, anybody listening to this, if you ever hear anyone say that they have 2 styles of trading, you cannot live full time like that. I will just tell you right now, you cannot. Chris, since you're on the microphone, Chris, if I gave you a car and said, Chris, I bought you a car, but it's got a Mercedes steering wheel and BMW tires and an Audi front and a Volkswagen back, you don't have a complete car, do you?
No.
Right.
I'd like to see it though.
That's my whole point in the end of the day is like, you know, when people try and go learn from internet and stuff like that, like I credit you. Yes, go try to find the information, but you're going to get a lot of general information from random places. You don't have one complete set way. Same concept. You can't tell me that you're going to swing one style and then intraday the other. Like it doesn't work like that. It's one style. You stick like this for the next 20 years and just literally use this to churn money all year. That's it. You know what I mean? So, Chris, we agree with this on the setup?
Yeah, looking
Beautiful.
good.
Beautiful. Done and done, right?
Lovely. Cheers, man.
Always keep striving, big man. All right, let's see what else is going on here. What else we got? Mehdi, you got mic? Or no? I'm muting your mic. Unless you got mic. You got mic, Mehdi, or no? Maybe not. Maybe he's not. I don't know. Maybe he's here. Mehdi, you there? Or no? Okay. Maybe Mehdi's not here. He said he's not a laptop to share a screen. Come on, Albert. Read the full message. Okay. Anyways. Let's just go real quick. I'm just identifying the range. That's all I'm doing. Okay. All right. Chris, I'm gonna mute your mic again because there's a pair that you trade and that he doesn't have a screen to share. I don't think that's so let's just run through this real quick. Let's do this example together as well. Okay, so that's a terrible range on the daily.
I have actually got a part of this. If you want me to share that screen.
You got it? Yeah, go ahead.
Yeah,
I'd love to see that.
It's a bit out of date.
If you have the analysis, that's just easier on my job, you know what I mean? I can just draw on it.
From last week, but it's pretty valid still. How do I do it? I can't even remember.
In the meantime, Chris, while you're setting that up, Julian, I'll get on EJ. I will go through GCAD, and I will also Lavish FX. I will go through the difference. Let's just see what Chris got on EA, and then we'll get to those questions as well.
Oh, share screen right in the middle. What's the matter with me? Losing my mind. All right, yeah.
By the way, you have a lot of people have been asking about your Telegram username. Because they're like, everyone wants to know how you got 2,000. Like someone goes, like one gentleman, I don't know if he messaged you, his name's Theo. And he was like, I was like, yeah, you got 2,200 pips. He goes, holy shit, I just realized that return must be unreal.
It was a good month. What can I say? It was
a good month. But hey, we hold it now. We got focus for another month. That month is gone now.
That's exactly it. It's past.
So, okay. You're going to take this though, right?
I mean, if I like the look of it, yeah. But I mean, this is.
No, I'm saying you didn't take it, right?
I haven't took. Remember, I took this trade though. This was.
Yeah, no, you got this one. This was basic, right?
Yeah, because remember you said it was at the end of the roller coaster, and I was being a bit edgy.
Hey, it's good you listened, right?
I mean, I got a bit of an ego bruising here, but we got it in the end, so I'm happy.
Right, and then so let's go over it right now. Chris, where's the last high or low? Boom.
Yeah, I've got that marked up and all.
This is one. Give me the buy. Let me see the daily. What do you have on the daily? Because I need to see what this is. Daily. So the sell is golden. Whoever's asking about Euro AUD, that's how you take the sell. So below what? So wait, real quick, because they're all going to take my word on it. Daily break first. A daily break to switch momentum. Remember, daily break. So Chris, daily break below what? You want to take below 1.5? No, 382. I like 382 better. Yeah. Look, you got short term here. You want to break that.
No, man.
Look,
Yeah, that's
short
it.
term here.
That's.
There.
I'm just betting we've got enough room in now to get the stops to break even.
I agree. This is definitely about 100 pips. I'm just saying the free flowing trade. Do you agree is back to? Because look, what could all this be?
Yes, of course. Yeah.
What could all that be?
Yeah.
And what type of retest?
That'd be structural.
All right, for upside, unless we break back below, invalidating that, right?
Yeah.
Okay, so I will. Whoever was asking about Euro AUD, short-term sell is below whatever that area is, 15780. Real sell is below. Like remember, daily breaks, 15730. Let's say 157 clean, and then give me the buy, Chris. Okay, so the buy should be a break above what?
This my zero fib. That's a weekly.
Yes, sir. Beautiful.
We want to be above that, definitely.
To invalidate, where did the sell start from? Notice it broke this low, right?
Yeah.
Got to invalidate this. We got to break back above to say it's a false break. And then continuation, and then Chris will run that back up to monthly.
Yeah. So your longs are above here.
Yes, sir.
If anyone, who was asked, I forgot who was asking.
Yeah, someone was asking. But
so that range is dangerous.
Damn, that could be a sick trade because if this turns out to be a structural retest, you will break the lows.
Yeah, that will rip downside as well.
You'll get to here, Chris.
Yeah, till monthly, yeah. It's
Don't you love being a price action trader? You know exactly what's gonna happen.
Yeah, it's you ain't got to worry about fundamentals so much.
That's the beautiful thing about this game. It's not like the equities game where the bad earnings are
equities.
So
you're looking at balance sheets and shit.
Exactly. It's not, this is more enticing. It's more fun, but there are rules that you got to follow. Just like any financial markets you trade, you got to follow rules.
But to be honest, I've seen people asking about EA a lot, and everyone's just losing money on it. So stay away from it at the moment.
Yeah, there was one gentleman in the course, Xavier. I think he was up like 85. He got the drop to the low. I hope he closed.
I think he did.
Because this was, I think Josh told him that it was short term because this could all be relief for upside. You know what I mean? Because he took the sell. You see that little low right there? He took the sell there and got that.
Yeah.
Do you have any of these other charts marked up? Because I know you do exotics. Some are asking about EJ, GCAD.
I think I did GJ today.
Okay, so
I've been so lazy, man. Honestly, I did.
All right, let's do GJ real quick. Just this is luckily right there. I like the daily better.
You know, I like the Forex guys. So.
Look, that's why I'll say daily for two reasons. Okay, tell me what start.
Send me a bit for you.
Oops. Okay, there. Leave it there. Oops, let me go one more time. Okay, let's go. This is for GJ. For you. No. They asked for EJ. Well, we can still do GJ. Screw it. We're here. Okay. Where's momentum?
Descending.
Okay, so if you want to take a buy, what breakout needs to happen first?
Got to go with that weekly.
So look, daily break above the weekly, right?
Yep.
Continuation, smaller time frame, good to go. Just like you have the sell, Chris, where you have the sell is short term.
The sell is short term, yeah.
Okay, how do we invalidate this? What do we have to break below?
Well, it's more dailies right down here, to be honest.
Right, because where did it start? By breaking that resistance. So you got to break here. So your arrows should be like this. That's how your arrows should be.
Yeah.
You know what I mean? Because would you agree this is critical here?
Yeah. The only reason I'm favoring the short-term sell.
Show me on the 4 hour. Maybe there's a better trade to take. I want to see. I mean, I'm just saying daily perspective right now.
Because the momentum.
Okay,
overall,
I see it.
Yeah.
Yes. Okay, that works. But it's short term. You agree? Because this could be what then, Chris? This could all be.
That could be a relief.
Right, for upside, because just real quick, guys, what Chris and I are talking about is the buy started once we broke this resistance. So to invalidate this buy, we have to break back below, stating this was a false break. And then you can target the lows.
But GJ is a nasty pair to trade. You've got to be prepared for big old wicks and candles on this. Just look at them. They're mad.
Chris, I dabbled into the crypto a little bit. When I dabbled into the crypto, it's everyone, like I'm telling you right now, anyone who thinks exotics or crosses are tough, 1 minute candles for cryptos are 100, 200 pips. I
don't even look at cryptos.
It's literally like giving heroin to a baby. I kid you. I kid you not. It is like 100 to 200 pip movements in 1 minute candle. Are you kidding me?
No. That's just gambling, man.
Uh-huh. It's unbelievable. Unbelievable. Okay. So we did GJ. Do you have EJ or no?
I don't think I dare open it. Let's have a quick look. This could be embarrassing.
No.
No, I don't.
No, that's all right. Leave it. Leave your analysis. Just delete this.
Delete that, yeah. That's just a trade. I didn't take that, thank God.
Yeah, he didn't take. I remember. Look at his arrows. This is what he wanted.
Yeah.
You see? Plan the
Didn't get
trade the plan. You feel me?
Yeah.
Okay, zoom out. Let's give EJ to Yulian. Let's start daily real quick.
Daily. This is going to be old analysis, so please excuse.
All right, Chris, 2 ways once again.
Oh, look at that. Yeah.
And let's keep this trend that you have here. All right, give me the sell, give me the buy, give me short term, give me long term.
I mean, the buy's the better one. You want up here, down, and
Okay.
back.
So Chris said 1, 2, 3. And look, once again, can be short term, look left. What type of retest?
Structural.
So real buy, Yulian is above here, pull back, rally to the monthly. You have to invalidate this. You got to break back above. Okay, give me the sells then. These are all the buys. This is short term. This is more long term.
Sells. I like them below. I don't know. I don't even like a sell on this because
So, but look, because you have a short term one, you have a very now. Look, if you are a ballsy man or a ballsy girl for that matter, but if you're a ballsy person, you're gonna take that short term sell, that trend there.
Oh.
You take this to here.
On an EJ.
So, but the real sell, Chris, is below. Look at your key levels below false break, falsely break it. Come on, how do we get it?
But even right below that, you got the monthly sitting now.
So, okay, but look, would you agree this is a very short term?
Yeah.
Because why I'm saying this is
squeeze it.
consolidation, this is false break, and this is holding. So you run it to here. Real sell, Chris, is below where?
Below down here.
Exactly how his arrows pointed it from last week.
Yeah, that's it.
Beautiful. Failure to do either, my friends, will warrant consolidation. All right, Chris, you want to just keep knocking them out real quick?
Yeah, go on.
Last one, I'll leave you. I know you got stuff to do. GCAD, you got it?
Pound CAD. I don't think I've done. I don't think I've got an up-to-date pound.
We are like the Jarvis of charts. I'm just kidding.
Fairly up to date.
This is complex. Notice this. Look at this. You have an impulse that turns into a reversal, that turns into continuation. That you have an impulse with another. Look at that. And within that, look at this. And within that, this could be relief after that impulse for continuation. So, instances like this, when it becomes too many different ways, make it very simple. Chris, give me the short-term sell. Give me the short-term sell, long-term sell, short-term buy, long-term buy. Go at it, my friend.
Sell bushes. Get rid of that. Short-term buy. Up here.
Yep.
Retest to the tops.
Okay. Long-term buy.
And then longer term, you want to break, retest, and further up.
Because you want to invalidate this sell that broke this low.
Yeah, that's it.
Validate it. Okay, give me the sell. Short term.
You might be able to squeeze one. Yeah.
Okay.
And then again, run it to the weekly.
So short term again into here. And then long term is below.
It's going to be, yeah, somewhere in there. There's a level somewhere. I ain't got it marked.
I would probably, because this is probably all false breaks, right?
Yeah.
So I would probably get below it. Continuation. Because why deal with this? You know this will, if you get that, you know you'll get this. You know what I mean? But if you're in here, you don't know if you're going to get that drop. Because it could just collect orders from here and then.
Yeah, scream upwards.
Right.
Pound's quite aggressive, as I've said.
Right. And so this will give you a clear direction for whoever's interested in this, only because tomorrow you got CAD data.
Oh, look at that doji there. That's a daily candle as well.
How many pips is that?
Oh, that one candle.
Yeah.
Let's have a look. This is going to be ridiculous. 180 pips.
That's nasty. Nasty. It's disgusting.
180 pip doji.
Disgusting. Nice. Disgusting. But
okay.
All in all, we broke these down. Chris, thank you so much, legend.
No problem, man.
Always. I'll go back to sharing my screen to finish off the last questions. And then from there, I will have to unfortunately run off. I'm sure you guys can guess by now if you've been following my webinars. Usually I run off when I got to go feed the girlfriend. Yeah, it's time to eat soon. So All right. Last questions. What we got? We got. If you are late, don't worry about it. Like I said before, this is all recorded. Will be uploaded to YouTube. You can find me on YouTube at ThatFXTrader. Guys, please help me get to 1,000 subscribers. That'd be really cool. We're almost there. So try to pump that up. And then what else we got? Jose, big man, you got a mic? I'm gonna mute you. You got a mic? You there, Jose? I unmuted your mic, or do you not have a mic? Do you have a mic, Jose, or no?
Yeah, can you hear me?
What's up, big man? How you doing?
I'm good. How are you?
Good. How's everything?
I'm good, man. Just still plugging away.
Stuff.
Part time, and still looking at your videos, and loving the course, and just progressing. Everybody has a different learning curve. You know what I mean? And like you said in your talks, man, it's really up to us how much energy and effort we put into it, and time that we put into it is will reflect on our trading.
Absolutely. Like the best quote that I can put towards it, and a lot of people say it in our group chat, the student one, it's, you could lead a horse to water, but you can't force it to drink. You know what I mean?
Right.
But big man, you had the question of, do I place trades before I go to bed, right?
Well, I've done it, and sometimes I have success, sometimes I don't, and I was just your season.
Now, do you mean limit orders based, or you mean like actually like confirmed trades, pull them before I'm going to sleep?
No. Limit orders based. Like
no limit orders because
they trigger once I'm sleeping or something,
Right, limit orders you can't do only because. What do you think my stipulations are going to be on that? Knowing me and how we trade with our method. What's our method? It's a breakout method, right?
You got to wait for the daily close.
Okay, but not daily close. But more importantly, if you get filled, and then what if it's a false break?
You get burned.
Right. Like for example, this is a great question. So look, like, you look at this. Let's say you had a limit order here, right? What if this filled you and continued to went up? You know what I mean? And on top of that, the other thing that becomes difficult with limit orders, Jose, is let's say you had a limit order here before you were going to bed, right? You want sells, let's say in this example, because this is all relief, right?
Right. And I'm thinking
but my whole point in this though is you want sells, remember? So if you took an entry here, what kind of entry would this be? An if some entry. Because market momentum is moving where short term?
It's ascending.
Right, and you're still looking for
a short descending.
Right, so you can't put a limit order there for a couple of reasons. One, a false break could occur and you would just get beat up. Two, this would be an if some entry because even though it might be creating a structural retest or retesting resistance, whatever it is, have to factor in that market momentum is counter to where the entirety of the momentum is in this case. So what you would have to wait for is a break, a retest, then go again. And that's why the whole point is limit orders won't work only because you're not aware of what's going on actively in the market. The only way that you could, take I said, take a trade before you go to bed is if you saw a confirmation like this, then you put stops above the highs and then you gave it a shot. You know what I mean? But that's my take on limit orders because the limit orders, the beautiful thing about manually entering versus putting a limit order in is that you are in control of why you're entering. The limit order does not allow you to be in control of why you're entering. The limit order dictates how you enter. And that, to me, makes me too uncomfortable.
Then I guess I have to change my schedule because I've been having.
This is the one thing that and I know exactly where you're getting at. I'm glad you asked this. A lot of people who come to me and come to course and they're like, can I do this with having kids or having a full-time job or whatever? And I say, absolutely you can. That's what our course is for. But you have to be willing to change some things in your own personal life because this is a lifestyle of its own. Not say, look, to scalp and having a life, like a full-time life, salary, family, whatever, that's very difficult. But swing is not because you do all your work on Sunday, set your alerts, and then just wait for them to hit, right? But you got to maybe adjust some things. You know what? Maybe instead of getting 8 hours of sleep a night, now you're going to get 6 hours of sleep a night because you got to stay up an extra 2 hours to see candle closes. You know what? I'm sorry, but that's a small sacrifice you got to make for a bigger picture. You know what I mean? So you got to be willing to commit to the same time to the lifestyle. Do you know what I mean? And it's, sometimes you got to wake up at odd hours and stuff like that. But if you believe in the vision and believe that, I'm going to make this a full-time job and this is going to supplement my income and this is going to change my life, then you know what? You know what I mean?
Right.
So not trying to be harsh on you, Jose. What I'm saying in general is just you just got to change some things, Legend, in how you go about your schedule. Like, for example, I usually always go to bed after 1 a.m. Do you know why? 1 a.m. is when the 4-hour candle closes and is also an hour before German pre-market is opening up. So you know what? If there's a trade about to be confirmed after 1 a.m., I'll stay up an extra 2 hours before London opens up at 3. But usually I'm always going to bed after 1 a.m. because I automatically know if trades are going to be ready in London or not.
Gotcha.
You know what I mean?
Yeah. Like with me, I've noticed, I noticed a pattern. I always see huge moves on every Monday morning in London session. London session is crazy every Monday for me. I mean, I noticed that.
Right.
I always try to take opportunities. See, but I live in the West Coast.
So you're 3 hours behind.
Yeah, so that means over here it's like around midnight when London opens. You know what I mean?
The way, Jose, be blunt with me, legend. How many pips you seek in a week?
Right now, I'm averaging.
Seeking, not averaging. What do you want?
Well, the goal is to do at least 50 to 100 pips per week.
Okay, that's the honest goal, right?
Yeah, just being realistic.
You need to trade 1 to 2 times a week max. Max. Like, I can't stress max. And if that's the case, whether you take a trade on Monday or you take a trade on Thursday, there should be no pressure to go and because look, if you're only trading dollar pairs, you're gonna get it. Take it from me, I'm the master when it came to 50 pips a week. You know what I mean? That's all I lived on. You know what I mean? For a very long time.
Nice.
1 pair, euro dollar, every week, 1 continuation play, 50 pips, done, next week, clockwork, every single month. That's it. Compound the hell out of it, and in 3 to 5 years, you're going to be like, holy shit.
Right.
I promise you. Now, if you're a guy who's going to be like, you know what, I'm going to seek 500 to 1,000 pips, then I'm either going to say, Jose, you're trading the wrong pairs, which means you're trading dollar pairs. You're not going to get it. Or I'm going to say, Jose, you might have to be willing to pull up more trades. But if you honestly are going to get 50 to 100 pips, Jose, look at, the amount of signals I send a week. I put 1 to 7 because sometimes I send more. But ideally, I'm averaging between 1, 2, or 3, potentially even 4, right?
Mm-hmm.
Even the first signal I send will get a minimum of 50 pips. Minimum. For example, first signal I sent last week, UC, it hit all to take profits, but within the first 6 hours, we were up like 65 pips. And I didn't pull that till I think Tuesday or Wednesday. EU the week before that pushed for like I think $1.20, $1.30. You know what I mean? You might be like, well, Albert, I might miss some trades. I'll be like, all right, fine, Jose. You miss 1 week. Next week you make 100 pips. You said your goal was make 50 to 100 pips. You just covered 2 weeks in 1 week. Fair enough?
Fair enough.
You know what I mean? Trade smart, not often, big man.
Okay, sounds good, man. Thanks.
You know what I mean? So what I'm saying in the end of the day is that if you got West Coast times, do the way I go about it. Check the charts at 9. What's 1 a.m.? 1 a.m. for me is going to be what for you, Jose?
1 a.m. would be like 11 o'clock.
At 11 o'clock, check the charts. That's when the 4-hour candle closes.
Gotcha.
If there's a trade setup that looks to be good, then you know what? You're going to change in your schedule now, legend, that you're going to be up an extra hour or 2 to, look for a confirmed trade in London. And you know what? If there's no setup by 11 p.m., then you can most likely say, you know what? There's probably going to be trades ready in New York, and I just got to be ready for when that, and you know what? That might be something that you're going to have to change. You might have to set an alarm clock for 6 a.m. your time, just for 10 minutes. Put your laptop next to your bed. 10 minutes, wake up. And that's the best advice I can give you, Jose. Like, I'll tell you what I do, but set your laptop next to your bed, 10 minutes, wake up, check the charts. You already did all your work on Sunday. You know what I mean? The way we go about the course. So it's either it happened or it didn't.
Gotcha.
And so it looks good, pull the trigger. If it doesn't, go back to sleep. So, and this is what I do. So now people ask me how I go about my New York session because I generally don't sleep much during the London. And so what I do is if I feel like there's a trade going to be ready in a certain time, let's say I'll set an alarm at 7 a.m. My iPad will be right next to my thing. I'll quickly pop open TradingView. If nothing's good, I'm going back to bed till 8. Once again, 10 minutes, check it. I'm back to bed. 9, once again, back to bed. And then by 9:30, 10, I'm up.
Gotcha.
You know what I mean?
Yeah.
I'm not going to lose sleep over it, but you know what? I'm just going to have to, get my butt up for 10 minutes, check the charts. Nothing's good. Go back to sleep. What do you think, big man?
That's good.
Yeah?
That's good, man. You should do a video on that.
So many damn course videos. Oh, I'm telling you, we will have the within 3 years, when I plow all, like, you know, when I plow every single thing that like, you know, that we can get into there, I think it'll be truly the #1 educational platform out there. Cause I think we'll cover like literally every issue anyone ever has. You know what I mean? Whether it's, you know, like for example, your issue right now is just, you know, figuring out a schedule that will work for you. You know what I mean?
True.
So
True.
I'm hyped for the future, but go ahead.
I know it's a common issue.
So of course it is. You're not the only one doing it. Listen, hundreds of millions of people go through this. You know what I mean?
Mm-hmm.
So for you, try that idea. See if it works out. And if you're someone, you know what, who when they go to sleep can't wake up with the alarm, buy a new alarm. Right. I'm telling you right now, they make alarms that will wake you up.
Yeah, an alarm with a big ass.
Because like I had a student come to me one time, Jose. I gave him the suggestion, right? He goes, "Oh, Albert, when I knock out, I'm out." I'm like, "Really?" I'm like, "All right, go get an air horn alarm and put it right next to your ear."
Oh, jeez.
And I was like, either you're gonna go deaf or you're gonna wake up. You know what I mean?
Right.
Like, you know, you gotta sacrifice and commit. You know, there's just certain things. Because look, Jose, the tough part is figuring it out. You know what I mean?
You're right.
You know, don't make the tough part about you know trying to find times. You know, just set the alarms, big man. Wake up, secure your 50 to 100 pips, and the moment you do it, you could be like, yes, I get to sleep in now every single day till next week. You know what I mean?
Gotcha.
That's how I look at it. Like when I hit my pips early for the week, I'm like, yes, I'm getting good nights of sleep now. Okay. That's why if you guys ever notice you're talking to me and I haven't sent a signal out by like Thursday, you'll hear my voice is very like raspy or whatever. It's because I haven't slept. But like, you know, if Albert's like on fire by Friday and I sent a signal out Tuesday, that's because I've been sleeping for like 3 days. You know? So let me know how that works, Jose. If it's still not working out, we'll figure out some things, Legend. We'll make it work for you. All right, big man?
All right, boss. Thanks.
Always. That's what I'm here for, Jose. Anything else you want to go over? Or was that just mainly it?
Nope, that's about it, man. Thank you.
Okay. Always, Legend. Always.
All right, bye.
Then Lavish FX. Do you have a mic, Legend, or are they not even here? Oh, he is. Yeah. Do you have a mic? No? Maybe? Oops. Do you have a mic or no? Can you hear me? Maybe not. Okay, real quick. Difference between continuation and reversal. Remember, to formulate a trend, you need 4 movements. When an impulse occurs, that's only 2. You have a low and a high. What you need is a higher low, which creates your 3rd movement, and then you need a higher high, which creates your 4th, and that creates your continuation. That becomes your relief, your profit taking, etc. Difference in a reversal pattern is that you'll see an impulse. Instead of making that 3rd movement to create your liquidation, your relief, your lower high, it'll continue to push up, stating that this entire movement is extended, and at some point we're expecting liquidation or relief. Now, doesn't mean that a reversal pattern means that this is invalid, because a reversal can turn into continuation for upside. Does that make sense? So remember, for a trend to move, it needs 4 movements, not 2. Does that make sense? Beautiful. NZD outlook, NZD CHF outlook. What does the purple and gray zones areas represent? Was that for me, Lavish FX, or was that for Chris? What does the purple and gray? Oh, these, yeah? Right? Yeah, okay. So these are just rejection zones. And so rejection zones just serve to give us indications of where potential pending orders are going to be sitting. For example, you know, we can take this right here. We can see here. It's basic support, resistance, supply, demand, whatever you want to call it. But what we're looking at specifically is the wicks and where structures really wicking off of. And I have a good analogy for this for you guys. Notice how we see so many orders here, so many buyers, etc. When we break, this now becomes resistance, etc. So we're going to expect pullbacks, etc., etc., etc. Whole point in the end of the day is that they act as basic support and resistance. They're here to tell us when potential pending orders are going to come about. For example, the sellers own this. When we broke out, it becomes the buyers, right? Or rejection zones. And then we break out, it becomes the seller's market again. Now, the best analogy for me to give to you on this is think about it, a rejection zone like this. When you put when you put your hand on a hot stove, it's going to feel really hot, so you're going to take it off immediately, right? But when, let's say, you put your hand there for a while and you break through, you're going to develop tolerance, et cetera, et cetera. Think about it like this. Your hand is here. Every time you touch it, hot, hot, hot. We break through, hot, and everything's going to start rejecting off of that. And that's the best way for a rejection zone to be explained. Does that make sense? Beautiful. Always, legend, always. Last but not least, I'm going to take this last question, guys, and then I'm going to have to run off, unfortunately. You said, what are some of the things you do to psychologically prepare you to trade? Any tips or advice? That is the last thing I'm missing. Some days it's on point, others not so much. Technically, I'm doing very well. I just get psyched out, especially today in all positions where winners shake my head. Andre, do you have a mic, legend? Do you have a mic or no?
Yes.
Hello, how are you, my friend?
I'm doing all right, man. How are you?
Very good, very good. So, the psychological aspect's kind of the biggest thing for you, huh?
Yes, man. Technically, especially, I followed you on Instagram. I do my due diligence, so trades that I see traders take. I go back and back test them, and I found a few traders that I follow, and you're one of them. And so technically, the USD JPY drop that just happened, the GBP JPY just happened, GBP AUD that just spiked up, all AUD USD that just dropped, all those positions, technically I saw coming, but for some reason the psychological aspect of it, I get psyched out. And the days where I get psyched out are the days where the biggest moves happen, like yesterday with GBP JPY. I saw that pin bar happen at that resistance level. I was driving, so I didn't get psyched out. I was driving when that happened. And that's what's missing. I know it's the psychology, and I just don't know I don't know how to get past it.
I got the number one answer for you, big man. You ready?
Yeah.
You're obviously risking money that you're afraid to lose. You're risking too much money on the current trades that you're taking. Fair enough? The way I look at it, look, and let's talk about this real quick. Why is everyone emotional when it comes to their trades? Well, you got sweat equity. What do I mean by that? Andre, apologies for saying your name correctly or if I'm butchering it. You worked your blood, sweat, and tears to earn the capital that you have, right? So you put into the market, and of course you have you have sentimental attachment to it now because you literally physically worked for that. So you see it fluctuating. Of course, you're going to be emotional. My best advice to people with your issues is either A, you don't have enough conviction in the way you approach the markets. For example, the reason why, you'll see a lot of my students or a lot of people who take my course firing away after a month or 2 months, et cetera, is because, the way we create and break down structure, the students of the course really develop a conviction and confidence on how we need to approach the trades. Because, as the gentleman said before, we have a zero tolerance policy, but in your sense, it's either A, the conviction and way you approach is not solidified enough, regardless of how much back testing you might have done, et cetera. What I mean by conviction is, I could use Chris, I could use Jose, I could use anyone, Mehdi, anyone, AK, anyone that's part of the course, and they could honestly tell you when trades are set up, they have no problem pulling trades only because they have such a belief in the way they approach the market. So that's the first part, in my opinion, would be just your conviction in the approach of trading. Or B, it would be solely based on however you're taking trades, the risk is so high that it's making you so emotional that it's causing you to second guess and psych yourself out. Because in the end of the day, if you're putting money into the markets that you're willing to accept to lose and willing to risk, in reality, there should be no emotional attachment to it once the trade is placed. For example, as we illustrate in the course, when you take a trade, Andre, you put a take profit and a stop loss, right?
Yeah.
When you have a take profit and stop loss, you automatically know the max amount of dollars that you could lose on that given trade, as well as the max amount of dollars that you could win on that given trade. If that's the case, there is no reason why you should be emotional in any way. And if you are, it's either A, you have no conviction in your analysis, or B, it's your money management is off, or C, it's a combination of both. Because if I told you, Andre, I'm going to give you a 100K account, and on this trade that you take, you're going to lose $500, and you lost $500, would you be upset off of a 100K account?
No, and I
Right,
think
because you would say it's only 0.5% of the account, and I'd say fair enough, it's all relative. And so would you say potentially that could be a reason why?
yeah, when you said that, I thought about it. When I first started trading, I started out with a bigger size of account, and I traded my way out of debt, basically. So
Brad, shout out to you, big man.
yeah, I was used to seeing like $500, $600, $2,000, $1,500 profits every trade.
So
But
what happened?
what happened was I didn't think it through. I traded, I got the money I needed to get out of debt, and I had more. But then I went on a losing streak, like I guess every trader does. And I've only been trading for not even a year yet. But I've been
So
studying
that's
my.
so I think this is my honest suggestion. I think it's a combination of what I said before,
Yeah,
and exactly the story you told me. That's a huge thing. That's a part of it.
yeah,
Is that you had this massive run,
yeah,
then you went into a downfall and potentially, lost whatever you had left. And now you're second guessing everything. That's completely understandable. And
Yeah.
that goes back into how I was saying the conviction in your own approach.
yeah,
Because if it's a money management issue, that's fixing that is the easiest snap of the fingers. But if it's a way that you approach the markets, see, like the way I go about it in the end of the day, and this is what I say to you, Andre, I'll say to anyone in the end of the day. If you're learning a method, if you're learning an approach, that approach it should consistently, no matter what type of environment you're in, allow you to return pips. And the whole thing that I'm getting at in the end of the day, Andre, is the way you traded to rip your account originally.
Mm-hmm.
In reality, if that was the case, you should still be continuing to do the same. As in, there should be no reason why you took a downfall, unless the money management was off or unless the analysis was off.
Well,
Because generally speaking, if you have, like, I know that you're fairly new and stuff like that, which is completely understandable. I'm just saying, generally speaking, traders who have such a set way in how they approach, if they have generally speaking, let's say, like, I would say after every 50, 60 successful trades, you'll see one little downfall. Like, the consistency is so on par. Do you know what I mean? Like, I'll give you the best example here. I do these webinars every
you cut out. I can't hear you. What just happened?
Can you hear me now?
Yes.
So what I was saying was, take this as the best example of all. And just this should correlate into you saying, I see my setups and they go through and then I'll pull the trigger, blah, 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 etc. Take it from me. I do these webinars every single week, in which every single week on Instagram, I post the same thing, before and after results, right?
Mm-hmm.
And every single week, they all go through exactly how I said they were going to go through.
Yeah.
And you would think, okay, Albert, you're calling every single dollar pair every single week. Wouldn't you be upset that you're not taking every single trade? And would you be shocked if I said, I'm happy that I'm not taking every single trade and I'm just pleased that my analysis is going through? Why am I saying that? I'm so happy and content taking 1 to 2 successful trades a week and moving on with my life than trying to catch every single trade in the world. I don't want to feel like I'm confined to a job. I want to do my job, do it well, and make it take the least amount of time out of my day as possible.
Okay.
And so what I'm getting at here in the end of the day, Legend, is you could use me as an example. And everyone asks me all the time, like, how much crap I get about this? People are like, there'll be some weeks where I just don't call trades because there'll be no viable trades for me to personally take. And people will be like, great, you're calling all the setups, but not one signal sent, right? And it's like, in the end of the day, you have to understand that less is truly more. And so for you, I think potentially it's a combination of, you had an unfortunate downfall, which is making you second guess some things. I think on top of that, I think you have too much attachment to potentially your money, which means potentially you're going in with too bigger amount. And, and potentially, let me see if I'm hitting this head, the head on the nail. You were used to seeing 500, 1,000, 1,500, right?
Yeah.
Now you're trading with a smaller account and you're trying to get back to those numbers. Am I correct?
Yep.
Right. That's stressful, my friend. That's not easy. Because I know exactly the situation you're in. Because basically what that means is like every time you take a trade, you're over leveraging your account because you're trying to get back to those bigger numbers, which is understandable because that's where you were before and that's where you want to be again. I get it. And so, that puts so much stress on you because you feel like you got to take every single trade. You feel like when trades go through that you're missing them and you didn't take them. And then the ones you do take, maybe they don't go through. And then you're in this big emotional roller coaster. And that just comes back to A, the attachment within the money, B, the conviction within your analysis, and C, understanding that trading is not a sprint, but it's a marathon.
Okay.
Like, that those would be my biggest suggestions, and not trying to beat you up, Andre, just trying to be like honest with you.
Look, I mean, look, I want to trade. I do. I want to be good at this. I need to figure something out because, like I said, the technical part of it, the analysis is, I'm good with the analysis. Like you said, I'm over leveraging, and I know I am. Because some days I'll wake up and it's just like F it, and I'll put the trade on and leave it alone.
And would you be like that if this was your only source of income and you had nothing else to rely on and this was it, etc.?
No, and that's the problem.
That's my whole point, big man. I got you right here. You know what I want you to write down right now that you learned from this whole conversation?
Sure.
You got to treat this like you're full time. Like this is literally life or death.
Life or death.
Feel me? And that comes in line with how you're going to control your risk, how you're going to approach the markets, etc.
Appreciate it.
Because you want to be a full-time trader, right?
Mm-hmm.
It's not a light switch, my friend. You can't just just turn it on one day when you go full-time. It's got to be, created through months and years of just continual habitual habit.
Okay.
Wow, that was just habitual habit, habitual actions. It's just the same thing every single week. That's why every single week I can call these setups every single week. It's because I never change anything. It's the same thing, and I'm just clicking the same button. That's it. You know what I mean? So if your techs are on point, big man, dumb down the risk, right?
Mm-hmm.
And just treat it like a full-time job. As in, not saying you have to slave the hours of a full-time job, but stating, think as if you were full-time. How would you be acting? Not wake up one morning, F it, I want to raise lots a little bit and try to make some more money. You know what I mean?
Yeah.
What do you think?
That makes sense. And
not trying to beat you up, Legend, just trying to be honest.
Look, I need it. I'm new to this, so I wanna succeed, man.
Absolutely. And so in the end of the day, if you need anything, Legend, you can always message me on Telegram, I'm gonna tell you right now, to get to a true proficient level in anything you do, it just takes hours of the same thing.
Mm-hmm.
See, if you master down the technical part, what if I told you, Andre, that's only 10%?
I know it is 90%. And that's the crazy thing.
Right. Yeah, that's what I tell everyone. I'm like, they're all like, I'm done with the course. When can I go full time? I'm like, you still got 90% left. Like, what do you mean? I'm like, well, you got to go through the trial and error. And they're like, well, didn't you do the trial and error for us? I'm like, not the trading trial and error. You got to go through your own personal trial and error, like psychological aspect.
And the thing is, okay, that winning streak, right?
Right.
I had a job. The thing is, I had a job, so I had money that I didn't care about, you know? So I could lose it. So even though I was over leveraging, it was like, I can lose this money. I'll just have to wait another week to put another deposit. But, the technicals were on point. And
okay, so we've already, Legend, established the issue. You know what I mean? What do you think it is? Look, just think about how you're speaking right now. What are you saying the main issue is?
Psychology.
But not the psychology. What we say here, Legend? You said I had a job. So what were you thinking?
Oh,
I had free cash to spare, and I could just burn it and come back next week and return, right?
Yep.
You know what I mean? All right. So Andre, real quick, tell me the main things we gonna fix now.
Treat it like a full-time job.
Okay.
Stop over leveraging.
Good stuff. And on top of that, just have fun with it. Don't feel like you got to rush it.
Trust the process.
Right. It's not going anywhere, big man. If it goes somewhere, you don't care about making money, go find some guns and gold and go hide in a bunker like I will be. Because if the FX market disappears and there's no currency, there's no exchange of currencies, yeah, the world's going to shit, okay?
Yes.
So that's how I look at it. If the world's not going to shit, you're not missing anything, you know what I mean? These markets are here forever. It's not like the equity market where you missed a big ripping apple this year, you know? Thousands of opportunities every week. Because last thing we'll talk about. Have you ever thought about over leveraging on a trade? You see it go through and you're like, oh my goodness, I could have made so much money, right?
Yeah.
But then sometimes you actually take that trade and then you lose all that money. And then next week you look at the same chart and you're like, wow, the movement wasn't really that significant. You know what I mean? Yeah. Just remember, in the end of the day, in the grand scheme of things, whatever you think is big is really not.
Okay.
You know what I mean?
Yep.
So just have fun with it. We're treated like a full-time job, life or death, right? Not literal, but, you know, in that sense. And have fun with it, all right, big man?
Appreciate it.
Always, always. If you need anything, Andre, you could always message me on Telegram. Always here.
Thanks.
Always, always. And then M asked, last but not least, on harmonic scanners. I am not an advocate. I am a mere price action trader. There is nothing in the world that will tell you how to trade, not a scanner, not an indicator. It has to be your own two eyes. Anybody who says they're a harmonic scanner trader is lying. They don't make money off of it. It doesn't work. The reason why I'm just being blunt about that is because I've seen too many people get scammed by it. We have many students of the course that unfortunately started off in harmonic scanners. They don't work. No bueno. Price action is the way to go. Now, if you want to factor in indicators to give you more confluence, I am okay with that. But the moment you tell me that you're saying the indicator is telling you to do this, I am not okay with it. Price action first, indicators second, news above all, of course. That should be your golden rule. Not trying to be not trying to beat you up. I'm just you know, I really feel for all the people that, you know, got scammed in this game. So that's why I'm out here doing what I'm doing, trying to help you guys and stuff like that. And so, my friends, legends. All right, last but not least, candlesticks. I just use candlesticks for mere indications. Candles are not indicative of confirmation. They just tell me when price is going to be exhausting or decelerating or potentially switching momentum. Still do not use them for confirm anything. They just indicate to me. Everything is an indication. There's only a couple confirmations. That is all. Very few things that will confirm to you. Everything else, patterns, fibs, trends, levels, they're all indications. Very few confirmations. That's all. That's why, you know, it's very specific on how you need to be looking for things. But besides that, sorry, Ryan, I didn't mean to be short and quick with it. I was just trying to just say that. It's just mere indications and stuff like that. But legends, one last question. One last question. I was like, I know she is. She just texted me. She's like, when can we eat? I gotta run. But U.S. raised rates. Why does Canada want to raise rates too? I don't really know what's going on in Trump's mind. No. It's gonna be all based on the risk appetite for most of consumer spending and then how they want to go about it. They got to be able to keep inflation below 3% so that no one's putting their money in the banks. And so I haven't really been focusing too much on why, but I just know that CAD wants their currency basically at parity versus the dollar. I can just tell you that much. But yeah, besides that, legends, I hope you have a wonderful, wonderful rest of the week. Trade safe. Okay, we got big stuff tomorrow. Remember. Don't trade these pairs. No. Okay, no pairs. Okay, none of those pairs. We got big data tomorrow. Trade safe, legends. Have a wonderful rest of the week. If you guys need anything at That FX Trader, you can find me anywhere: YouTube, Instagram, Facebook, etc. Hope you guys all have a wonderful rest of the week. If you guys need me, send me a message. More than happy to get back. Besides that, guys, this will be uploaded to YouTube later on tonight. There will be 2 videos, the full length and as well as the highlights. Hope you guys have a wonderful rest of the week. Trade safe, and I look forward to seeing you guys all in the next webinar, guys. Have a wonderful rest of the week. By the way, next webinar will be Tuesday at 5 p.m. As always, these are weekly at the same time. Have a wonderful rest of the weekend, guys.